question is, what documents are required when approaching the bank for business credit, and why are they needed? So starting with the latter question first, why? I'm sure many of the business participants viewing today will hold the view that bankers require way too many documents when it comes to business loans. As a banker, I sympathize, but it is a necessary evil. In the world of business credit, financial information is the native language in which you convey your business story. Without it, it's like you're speaking in tongues. As mentioned in my first slide, one of the key requirements is the demonstrated ability to service the loan. So the documents typically requested in the main allows one to do just that, to be able to demonstrate that debt servicing ability, right? Um, 4 key documents that are typically required by bankers are listed in order of complexity. So let's start with the first one, right? Um, Bank account statements. Opening a commercial account and passing your business revenue through it is one of the most basic requirements, but it can go a long way in substantiating your earnings. I would often say to my barber, for example, that I can't verify the money that he puts in his back pocket. So while it's convenient for him, it does not allow me to substantiate his income and therefore his ability to service the loan. Right? So the bank account statement is where it starts. Right? Next, let's look at contracts or purchase orders from major clients. So let's say, for example, that you have an agro processing business and you have a large order for pepper sauce from a major grocery chain. Providing the bank with a copy of the approved purchase order or contract can be used to substantiate the anticipated earnings that you will get once the order is filled, and on which basis specific financing to help fulfill this order can be considered. Right? Next is the main set of documents will be required in most cases. The financial statements. These include your balance sheet, your profit and loss, or the P&L as stated there, cash flows, statement of equity. The financial statements for a business is a comprehensive representation of the financial performance of your business and will allow your bankers to properly assess the relative strength of your business and its ability to service its debts. So when utilized in conjunction with other information, such as the bank account statements, for example, it also allows your bankers to more accurately determine the amount of working capital that the business would require, and which will be key in ensuring your business has access to sufficient cash flow to operate efficiently. I mean, we saw it in Parvati's slide when she showed the cash conversion cycle and how important that was in attaining your sales, right? Your working capital financing would aid in being able to have access to cash. And those financial statements are key in establishing how much of that is going to be required. So I know a lot of small business owners cringe at the thought of having financial statements prepared, but it is the most useful tool in accessing business credit from your bankers. Next, arguably, probably the most complex would be the business plan. These are generally required for businesses who are now just getting starting up, or for those who may be diversifying or introducing a new product or service, right? It does take some time and research to properly prepare, and sometimes new business owners would pay someone to prepare for them if they are required by their bankers. So sometimes, we will consider this acceptable. It is important that the business owners themselves be heavily involved in the process, as it represents the blueprint for how your business plans to compete in your particular market, at what level it would break even, how it plans on marketing itself, and what financing is required to do so. Right? So that's the business plan. we've highlighted these these financial statements and the financial information
Mm-hmm.
necessary to come and approach the bank for financing. But it's an important point to make that this financial information is also very important for the business to be able to know how their business is performing, right? To know if it is that they're profitable or not, if they need to pivot from one strategy to the other, if a product is making money, is losing money. And from the perspective of when you bring in some professionals and whatnot, I mean, there could be a number of different triggers. I mean, in the first instance, there are a lot of apps now and technology that allow accounting software that allow one to do their own thing and be able to provide reliable financial information to the banks using those, right? But at some point in time, as your business begins to grow and begins to mature, it may be necessary to, as a good friend of mine would say, is necessary to work on your in your business as opposed to on your business. So you need to have a good sense of um, putting time in those areas that where you make money as opposed to the financial aspect of it, and have someone do that for you. So it may be necessary to go there. So I just wanted to make that point before moving on.